Good morning, folks. It is Friday morning, the 28th of April. Just looking at the Forex markets this morning, seeing continued strength now in the British pound, and the euro's just hit a bid as well as we speak. Seeing continued weakness now in the Canadian dollar and the Japanese yen. Also, the New Zealand dollar is being dragged down as well. So looking for entries and possibly getting long pound against the CAD or getting long pound against the yen. Also euro against the CAD and yen and New Zealand. So I'll be hanging out in the chat room all day long today, as we do every day, discussing and looking for entries. We've got US GDP and Canadian GDP out at 1. Good morning, folks. It is Friday morning, the 28th.
Right, evening traders. Sorry about the delay. There was some technical issues. Basically, I can't get into the chat room, but we have sorted it out. So look, there's going to be a little bit of delay. Dom's going to help me with any sort of questions that we do have going on there. So that should help. But that being said, there's definitely an interesting market here. Now, if you've been tuning into my streams, you've not been waiting for this ECB.
Good morning, folks. It is Friday morning.
Yep, okay, don't do that. I've been waiting here for the ECB to talk it down, then to buy into that dip. And that's definitely what I did, and I was extremely lucky. I bought the Euro USD at 105, so 108.55. Literally, probably with the spread, would not have got filled on any lower spread. It bounced off 105.51. Now that's a little bit of a talking point, right? You can, when you set your limit orders, don't set it at 108.50. Yeah, everyone knows the support is there. You set it at 108.60 or 108.55. Therefore, you get filled for sure. At 108.50, you don't know you're going to get filled because the market actually has to go below it. You have to go below it by your spread. and depending where you're trading, that spread can be 2, 3, 4 pips, right? So you definitely want to have a little bit of room, and you also want the market to find support just ahead of that level. So I usually use the rule of thumb of 10 pips above a support, 10 pips below. So if I was long on the euro and I wanted to go to 110, then I put my profit at 109.90. This particular case, I'm long at 109.80 to take profit. So that's sort of the trade there. I'm just closing out one of the trades that was in a bit of a wrong spot. I don't mind buying the dip though. Basically improving my entry point is what that is all about. A pound is doing quite well, even though nothing crazy in the CPI. It's still doing quite well. It's grinding higher and it's under cover sort of stealth rally. 130 is definitely on the card soon, and so I'm happy with that trade. Euro USD, I'm actually going to put my stopped entry as well. So I've got 2 trades running stopped entry into what could be an interesting US GDP number, because the US GDP is volatile and is expected to be weak compared to last quarter. So if it is, I don't think the US dollar will be able to rally sharply off it, right? And definitely with the Trump talk in Asia, which is all pretty negative rhetoric, you might be seeing some risk off in the US session. So I'm a little bit worried about that, and that's why I have cycled out of the euro yen. Euro yen is my main trade I'm really excited about, but I've cycled into the euro USD. Let me check the quality there. Dom's going to give me a little update on how it's streaming the quality. I can't see it, and I can't I answer your questions very quickly. Dom's going to feed me the questions as well. Excellent. It seems like it's all good. So it's just one particular site. I'm going to have to clear my cache and cookies, and just get into that. So this has been my main trade. The main trade I've been talking to traders about for all week, and my clients about for all week, and it's all about buying that euro. It's very hard to stop its rally, and I suspect this sort of price action indicates we're going to 110. And then if there's any sort of negative US data next week or this week, or just generally, I mean, it can break 110. Don't think that the 110 is the sort of top end of the euro. 115 is the big level. Yeah, I mean, this is just a stepping stone, the 110 level. But the way the euro has been trading, I suggest that it is going to be mucky around at the level for a few days at least. So I'm pretty happy to take profit towards that level. I don't think it's going to be a clean break. I don't think we have that sort of market at the moment where you get this clean. Not everyone's on board with the euro rally. There is still some stops to be taken out, but that's not what I want the rally to be about. I want it to become the trade. Yeah, I want it to be up at 113 and everyone talking about, oh, it's going to 118, and we're trying to catch it early and sort of get exposure as it happens. So yeah, it is. It's an interesting market in terms of it's happening, right? When you see a trade and it starts to behave how you expect it. So this is based upon European yields and just the market wanting to buy. Also, we had a little bit of strong CPI number coming out today. It's a little bit stronger, but nothing crazy. Core CPI at 1.2 versus 1.0%. And that's pretty, I mean, it's a 0.2% beat, which is pretty big beat. But it's not, it's not like out of this world stuff. It's just, it helps spark the rally. Now who's worried, yeah? The shorts are worried, yeah? And that's a very important part of your trading psyche. You have to understand who's worried, who's not. So, who's going to sell the euro up here? You have to be pretty aggressive. You don't have an ECB to help you. You've got a market which is technically very strong, has gapped high and has broken higher, has had consolidation and pullback, found support multiple times at a level, and had a big candle rally. This is pretty aggressive. To sell into this, I don't know who would want to do that. Yeah, that's not my style, and I suspect that there's still a lot of people praying down here that the gap gets closed, and the fresh sellers in the last couple of days have to be worried. Yeah, you have to be worried about that price action. and so their stops are going to be above, you know, the 109.50 level, and that could propel us to that 110, where more substantial selling probably can come in, and it all depends on how that US GDP numbers come in. So the US GDP it's the advanced measure, which is the sort of the first reading of it, and it's, you know, the most important reading. You know, you set the sort of the goalposts with that, and the first set of data. Also Chicago PMI and revised consumer sentiment, and a few Fed speakers tonight. So there is actually a fair bit on in the US session. Not too much, which is going to stop this euro rally. I think this is organic and fundamental and real. Yeah, it's got technical backing as well, so it's a pretty dangerous sort of trade. Like, I love it because I'm long, but you know, I'm sitting here and thinking I haven't been in this sort of situation for a while, where it's really sort of quite easy for the market to continue higher. So I'm pretty happy about it, and I'm going to be watching it pretty closely later. But if the US GDP is as expected or weaker, you can imagine it. You know, we've got ourselves a trade. What is surprising though is that the dollar yen is continuing to rally. You know, this is with the Trump comments today. Trump was talking about how South Korea, he's talking about cutting up the trade deal with South Korea. I mean, that sort of stuff gets people a bit worried, you know, that he's still got the anti-trade agenda. And I think that's going to be an issue for him if he continues to speak about it. And at some point it's going to be negative for the markets. Given what he did with the NAFTA, where he talked about cutting it up and withdrawing, and then 2 hours later, or 5 hours later, coming out saying, "Oh no, I had a chat with them and they're going to negotiate with me." That same thing could happen here, with South Korea. That could be a negotiation tactic, and perhaps he's going to be known as crying wolf. And you know what happens then? We just stop ignoring his comments, unless he's really serious about something. But either way, the next big test for Trump is whether he can get the tax plan and the healthcare plan, revised healthcare plan passed. That's really what's going to be the major thing that sparks the US dollar sell-off or not. I'm looking for the US dollar to struggle, actually, just generally going forward. I don't think he's going to do a great job. So I'm really happy to be long euro yen as the way of playing risk on. If things turn off though, because of Trump's inability to get things passed, then we have to drop the euro yen leg. It's just not going to be the cleanest way of playing it, and euro become the main way of playing it. Alright traders, let's have a look at some of the data out at the moment. Alright, so we've got a Westpac report here. I like Westpac. I think they do things well. Got the Euro USD. These are the trade recommendations for the pairs. They want to sell the Euro at 110. Direction, dollar yen, BOJ's helping the dollar yen to rally. Yeah, well, it's not hurting it. Pound. So the Euro Summit is like not that far away. Euro Summit's... Jesus, I'll get the exact date. I hope it's not this weekend. I think it's after next week. Oh wow, it's this weekend. Okay. Do not be long the pound going into the weekend. If you get comments out from some of the more aggressive European nations over the weekend, that can create the catalyst at these levels for the pound to reverse. Yeah, this is too close to 130 to be testing the market's resolve. Aussie dollar sideways, Kiwi down, blah blah blah. Nothing crazy there. Look, that's actually good news. I wasn't fully talking and looking at the pound this week because of the euro and the ECB and the dollar yen moves, but the pound has been sneaking higher. But with this Euro Summit coming up, this is really dangerous sort of trading at these levels. All right. So post the French election, you see the options costs for the euro plummet. Yeah. So there's no protection cost in sort of selling calls or puts. You know, there's all people who are buying downside protection could easily get out of their trades. It to me is that's a bullish event. Yeah. Now, if there is some polls suggesting Macron's losing, that Macron's losing his lead, it would have to be a big significant change from 60-40 down to 55-45, something like that to get the market excited. And that would be negative for the euro if that happened over the weekend, but I don't think that's going to be the case. It's pretty steady. We showed you those polls for the last 6 months. It's been very steady. Le Pen hasn't really changed in her vote versus this, that, or each of the candidates. And considering the polls in the first round of elections were very spot on, I don't think there's any reason to doubt that these new polls are going to be off. Betting markets are 90% sure that Macron's winning. So 90% is pretty good in a head-to-head race, right? There could be a scandal though. You never know. There could be a scandal. Even though I can't read the chat, if you want to ask a question, I can get it via the Skype. So if you do want me to look at a particular player, I can have a look at it for you. CAD. Yeah, let's just stay away from the CAD at the moment. Alright. So the Eurozone inverted, the Euro inverted index is rallying. It's to do with yields starting to rally in Germany. The yields that you want to watch in the Eurozone are the 2-year German yields. Let me find them for you. Alright. They're still extremely negative, yeah. If they start to rally, you've got yourself a situation where we will go significantly higher. And what we had last night was the market dipping down towards the minus 74 level. And then we've rebounded so far today in the European session. And if I was looking at this chart and I told you it was a Eurozone chart, you'd be able to believe me, yeah? Let's have a look at the daily of the Eurozone. I mean, they're not very similar, but they're pretty similar. Same sort of gapping, same sort of pullback, so you can get a general layout of what's going on with German bonds. And it's going to be harder and harder for the ECB to control the yield rally because they've kept them so artificially low with the QE program that there's going to be a natural rally here. You can't keep 2 years at negative, right? You can't keep 2 years more negative than the spot interest rate, right? And expect it to remain that. If they start to raise rates or normalize, then German 2 years is going to have to go positive. And that's a huge rally. 0.75 basis point is huge in the market there. No, Shay baby, I don't want to talk about dollar CAD. Dollar CAD at the moment is very hard because of the NAFTA issues. Yeah, there's a lot of reasons to be buying dollar CAD, and oil is one of them. But the headlines are so mixed, and it's hard to know if he's serious or if he's just posturing. that I don't like playing the long side at these levels because it's a little bit too far long. But it is under the same sort of pressure as Aussie dollar and New Zealand dollar, in that the yields are being compressed. So when the Eurozone yields rally and the US yields rally and the Canadian yields stay the same, then it's very likely that it goes higher. Still the CAD concerns remain, but CAD shorts at risk of a squeeze. Yeah, you saw the first signs of that squeeze when it moved down. Oh, they're very neutral on dollar yen. Gold is sort of inverted with dollar yen. So given that dollar yen's been rallying in the Asian session, downside is possible and likely. Even though it looks like it's basing here, and 1260 is a bit of a support from back in the day. It's a bit of a resistance from back in the day. So resistance often becomes support. So don't be surprised by this, yeah. But if dollar is higher, then it will probably break it and head down towards that 1240 level. It's definitely possible here in the short term. So this is a very dangerous sort of buy. You have to really believe that uncertainty and issues are going to remain to get involved in the market here. And it's definitely not the sort of dip I want to buy, even though it's in an uptrend. I don't want to buy this dip just given the circumstances, and that the stocks aren't selling off, dollar yen's rallying. Why are we doing this? It's definitely going to be in play with the US GDP though, and you will see it move dramatically, I suspect, tonight, especially if it breaks lower below 1260. I think we'll be closing around 1250. Yeah, so these X's a little take profits. Getting out of trades, letting a little bit run. I'm not really trading too much in that account. Let's have a look at the UBS spot market. Euro USD bulls seem to be disappointed by the ECB press conference. Draghi didn't really come out with anything new. Blah 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 blah. Yeah, in my opinion, doesn't look to have changed a dip. So this is another bank randomly, like this is UBS, and we looked at 2 or 3 banks yesterday that are talking about buying the euro dip. It's a really common trade. I think it's and it's not dangerous because it hasn't rallied. A consensus trade is dangerous after a big move. Pre-consensus, start of the rally, everyone getting excited is not dangerous. He still believes there's French election hedge unwinding and euro yen has higher moves to go. Yeah, it could be. Euro would be euro pound. Yeah, we're going to look at euro pound a little bit more next week. I do like to sell it towards 85.50. Don't think we have a chance to get up there at the moment. Yeah, we struggled. We struggled on that second extension. I don't think that we can get to these selling levels that we looked at earlier in the week. It's just not happening. Not enough euro strength at the moment, and too much pound outperformance. Yeah, so I'm pretty bearish on the Aussie given the price action. It's not the best pair to trade though because it's so quiet. Yeah, so this is the whole week's price action is 120 pips. That seems like a lot for the Aussie actually, because it generally doesn't trade that much. We traded since January 16th in a 200-point range, so it's extremely quiet. We've broken down, got to 75.40, and then it's bouncing up since. So selling